Hey everyone, today we'll be talking about residents and non-resident persons in the UAE as per the public consultation document for corporate taxation. We'll also be touching upon the concepts relating to permanent establishment and UAE sourced income. Before we move ahead, please click on the subscribe button and the bell icon to stay updated on our future weekly business and finance related content, which is incredibly useful for business owners, CEOs, CFOs, entrepreneurs, and those who aspire to be one. Now let's get back to the video. It's important to understand the concept of resident and non-resident in the UAE because it's only after understanding this can we calculate the taxable income for UAE corporate taxes. So who is a resident in the UAE? As per the public consultation document, the following will be considered as residents in the UAE. 1. An entity incorporated in the UAE. 2. Any natural person who is a UAE resident conducting business or a commercial activity in the UAE. And finally, a foreign company that is effectively managed and controlled in the UAE. This is based on if the directors, decision makers, or key management is located in the UAE. So what is the tax basis for a resident? UAE residents would basically be taxed on the worldwide income for legal persons and local UAE income for natural persons. Then we would reduce certain overseas income that is exempt from corporate taxation, and again we would reduce the tax credit received for paying corporate taxes in other foreign jurisdictions. Do non-residents have to pay corporate taxes in the UAE? Well, non-residents are every other entity that is other than a resident in the UAE. And in general, they do not have to pay corporate taxes in the UAE unless they earn taxable income with a permanent establishment in the UAE or the income was sourced from the UAE. So let's get into these concepts in a little bit more detail. What is a permanent establishment? The concept of permanent establishment is very commonly used in international tax practice. In order to avoid complexity, UAE is mostly going to adopt OECD's Model Tax Convention Article 5. This way, it will be easier for international businesses to assess the permanent establishment in the UAE. The same concept will be used for free zone entities as well to decide if they have a permanent establishment in the mainland. Investment fund management businesses will, however, be exempt from this. So if the investment fund management or the wealth management is regulated in the UAE and they're providing services to foreign customers, then they will not be triggering the permanent establishment concept in the UAE. The permanent establishment will be triggered if the following two tests have been met, which is the fixed place of business test and the dependent agent test. What is the fixed place of business test? This concept is basically if there's a fixed place in the UAE where actual business is done, either wholly or partially. It could be any building, office, management location, or real estate which is actually located in the UAE for over 6 months in a year. Do note, however, in the following cases, no permanent establishment will arise. 1. If there's a preparatory or auxiliary business activity that is occurring. For example, marketing, market research, or other promotional activities. And 2. If the permanent establishment is used only for store, display, or delivering the goods for a foreign company, or even keeping stock for making them available for another person for processing. If there is no fixed place of business in the UAE but a dependent agent in the UAE, then the permanent establishment may be triggered again. If the foreign company has UAE-based persons or business travelers that act on the behalf of the company habitually in the UAE, then the permanent establishment is triggered. This includes when the dependent agent negotiates and completes a contract on behalf of the foreign company without any material intervention. There is, however, an exemption. If the agent is independent from the foreign company, the agent has to be economically and legally completely independent from the foreign company. Now let's get into the concept of UAE sourced income. Understanding this concept is important because this is getting into withholding taxation. Right now, we have 0% withholding taxation that's going to be implemented in the UAE. So there isn't a real material impact. However, this is definitely going to change in the future. And when this increases, then there will be a tax impact for transactions with UAE sourced incomes. So how do we know that the income is UAE sourced? Okay. Firstly, the income is earned from a UAE resident person. 2. The payment is attributed to a permanent establishment in the UAE of a foreign company. Or number 3, the income is derived from activities or contracts performed in the UAE, assets located in the UAE, or rights of economic purposes in the UAE. Which in effect means that if a company outside the UAE is going to be invoicing a company that is a resident in the UAE, then withholding tax would apply. I hope this video gave you a better understanding of resident and non-resident in the UAE as per the corporate tax public consultation documents. We've now reached the end of our discussion. If you like the video, hit the like button and subscribe to our channel. If you want us to talk about any specific topics, please do let us know in the comment section below. See you in the next one.